Good morning, everyone. Welcome to the metal markets. Happy Monday. I'm your host, Market Stalker D. And we're going to be having a look into some precious metals, one base metal, but also energies, to see what kind of levels are waiting for us. Now, I'm still having some computer issues, so we'll need to be dealing with that later on. But should be sorted by tomorrow. Alright, so let's have a look at copper. Now, copper is in rollover, so it should be rolling within a couple of days. As it stands right now, we're very Asia range bound. So Asia high was right around this 590 level. Exactly where Asia high was created, went all the way down, created a temporary bottom here, so that becomes our orientation point. When it comes to the options levels, nothing much has changed really. 590 is still an orientation point to the upside, 570 remains a level, but 580 has a little bit more open interest than it did last week, so 580 could be where they want to test. And hilariously, last week when I was here, I was looking at that 570 area to become a reversal. And one of the reasons why I do prefer mean reversions over continuation trades for this part of the day is because the mean reversion typically has the larger MFE, larger movement, maximum favorable excursion. Even though the probabilities of the setup are kind of 50-50 if you don't take any other confluences. But this one actually did bring a nice move higher eventually. So I wasn't wrong, just early. However, the 570 to the downside, if we tackle Asia low and 580, and if it sustains below it, that remains an orientation point. Things get a little bit muddy during rollover, so I'm not sure that I'm going to be focusing on copper today. And instead, I am actually looking at nat gas because there is a cold snap happening. So I was looking at some of the reports of like storage and what they're actually saying. So looking at the storage, there is a little bit of a draw. So that means they're kind of falling short a little bit. And that tends to mean a slight bullishness. But at the same time, the storage is still kind of within the 5-year average. So it's I would classify it as moderately bullish. Looking at the options levels, 3 evens even on this new contract still remains an area of interest. I would expect that to be tested. That would be one hypothesis. We test 3 evens, maybe we wick slightly below it because this is natty we're talking about. It's a bit wicky. And then reclaim and a continuation higher. Now, if they don't test 3 evens, they just carry on up from here, I would be looking for the VWAP to be reclaimed. And then maybe I get a setup a little bit later on. But either way, this is kind of middle of nowhere for me. So I'm just watching. It is Monday, so we don't want to be rushing into anything. We want to make sure that the Monday is nice and controlled to set you up for the week. So to the upside, we have 310 as a potential level intraday where we could see some hedging happening. If that doesn't give any meaningful hedge, then we're looking towards the ADR high, which is a statistical average to the upside using the previous sort of 10 to 14 days. And that's currently sitting at 314. Anything higher would be a bit of an outlier day. But yeah, we're sitting right in this weekend gap. Weekend gaps are perfectly normal on Natty, even though they look horrendous, right? They're like, oh my God. But it happens nearly every single week, so that's the norm. How's the background music? Is it too loud? because last week I think I had it a little bit loud. Trading Nickel says, good morning. I didn't get up extra early, and I get to learn from you for a short time, the beginning instead of commonly the end. Yeah, this is much better time frame for everybody, I think. Right, what is the crime? Says happy Blizzard Day here. Yeah. So again, that would once again be a little bit bullish, but consider the natural gas is a pretty, they're very it's a very lively product when it is moving. When it's not moving, obviously it's like watching paint dry, clearly. But whenever we have cold weather, that typically tends to bring increased demand. Typically. It's not like, oh yeah, definitely buy natty. It's not quite like that, because if we lose 3 evens for whatever reason, we're actually looking at 265 to the downside as the next major area. A lot of movement, right? And dangerous for intraday. So this is why these orientation points are pretty important. All right, in about 3 minutes, we are going to have the London Metal Exchange opening, where copper is traded quite a lot. So we're going to be attaching a VWAP once that goes through and seeing how it all behaves. I'm also moderately bullish on RBOB, because again, it's the time of the year. But that is heavily connected to what crude oil is doing as well. Trade Nickel says all Topstep mics are quieter than all other channels, so I hear you fine. I'm unaware of background music. Does that mean it's too quiet? Because we have some melodic dance. Trading with CJ, I have no idea what that means. So and by the way, I can't hear the music, so you have to tell me whether this is okay. And yes, weather, the Gary BB. Weather is a very important component in natural gas. You can't just stare at the chart and go, la-di-da, it's all going to be fine, because it's heavily seasonal, right? So you have to take a peek at what's going on. Now, obviously, I live in England, so I have to rely on reports of what's going on, or maybe ask my Topstep colleagues who are in those areas. But just looking at, how things are, most of the draw is happening in the east and the Midwest, and then followed by South Central. So that's where the draw is coming from. Music is perfect. Okay. Awesome. Am I looking at silver and gold today? So silver is in a precarious position, just like copper, where it's in rollover. I personally don't like trading things in rollover. Gold, I'm just looking as a benchmark, and we can go over some levels in gold if you wish. 5,200 was the call wall, the first call wall, and again, lo and behold, that's exactly where it stopped. Coinkydink? I do not think so. To the upside, we are looking at the average daily range high as the statistical top at 52.66. Now, when I say statistical top, that doesn't mean it's like, oh, it's going to get there and immediately reverse. If you have something contextually that's happening, like single prints left to the upside, or there's something kicking off in the Middle East again, that can bring in risk off sentiment, which will push the prices, Jesus, can't talk today, into an outlier day, which typically sees some single prints left behind, the auctions that are very kind of limited with pullbacks, and generally just a relentless move that mainly keeps going. And if you find yourself in that kind of a day, probably not a good idea to try and fade it, even if it is an average daily range high. So again, context is king. That is one of the challenges. And whenever you're trading at levels that are a little bit trickier, you have to rely on the intraday side of things, which again makes the probability slightly lower. But if you use something like Asia high, Asia low, profile, you know, how both the previous day profile and the developing profile are looking, what do we do in relation to the initial balance, how many TPOs per row do you have, you know, all of that can bring a little bit more constructive, critical thinking. But yeah, so somebody asked whether we are going up to 5,600, maybe this week, maybe next week, but right now 5,600 is way outside of the statistical average on gold over the last 2 weeks. Not impossible, just maybe a little improbable. We would need an external catalyst, right? So this is the daily chart. So what do we have? We have a big sort of single print down, and we're trying to fight it. We're you know, trying to go through it. The edge of this single print is sitting at 52.47. So single prints can act in two ways. They can be a weak structure that completely gets closed. So they start to go through it and then eventually just go all the way up where it came from. Or they can also be areas for quick reversals. So you will typically see wicks into it and then a quick sell-off. So again, two sides and context is what should be taken into account when deciding either or. And it has to be a binary decision. It can't be, oh, well, I think that this is what's happening. So have a hypothesis, have a way to invalidate the hypothesis. That's a very important part of trading. And accept your losses as well. Don't freak out. I know that every time any one of us takes a loss live, we get ripped to shreds. But guess what? We don't freak out with a loss. We're just like, next. The freaking out after is the ERN response, error-related negativity, that causes cognitive dissonance. So you're expecting something to happen, that doesn't happen, and then your brain goes into danger mode, fight or flight. So if you can train yourself not to do that, and just go, took it on the chin, no problem, let's carry on, then you've got something. Look in larger time frames. So don't just look at it per trade basis or per day basis. Look at it per week, per month, and things become a little easier. Right, so I'm going to stay on RBOB here just to kind of see what they're doing with it. Starting to liven up a bit. All right, so we've had the LME open. I'm going to drop down to 5-minute chart and anchor a VWAP at 11:14 my time, which is literally just this candle. And it's going to take a little while before we see what they're doing. Volume is still below the average on copper. So until that changes, I don't really want to do much. The correlation with gold and copper intraday is very low today. So gold is not going to be the one running the show for now. That may change the closer we get to COMEX. But yeah. So this blue thing, that's the correlation with gold. So let's just leave that to cook. Natty is also livening up slowly, but still below that volume average, so no move yet. What is the crime? Says I have a gamma flip of 80.45 on silver. Let's have a look. Yeah, so it depends what how many strikes you're using. I mean, it's good enough. I have it around 80. So it's close enough, right? Let me catch up with chat. My long-term bias on equities as the Japanese yields show record highs. Let's have a look at equities. I'm a commodities trader primarily. That doesn't mean that I don't look at equities. I actually did a pretty good YM trade on Friday, so not Friday, Thursday. Friday I couldn't trade, I had issues with my computer. Alright, so for this purpose, let's have a look at the daily and the weekly as well. To me, this looks incredibly range bound, and this has been going on really since about October, end of October, bar a few pops outside of the range. Nothing much has happened. But another thing that's a little worrying. So if you look at I'm gonna block out my face for a second just so that you can see everything. One thing that's a little worrying for me, whenever this is a recent thing, whenever we have an up day, that tends to be a lower volume than the down days. So, and again here as well, so downward candle, the next day technically bullish, right? But the volume is less. This one was a bit of an outlier. But then ever since, the shorts have been stronger. This could be a sign of distribution, like true distribution, which frankly we haven't seen in a very, very long time. I started watching ES in 2013 when I became a prop trader, but this is the first time that I'm seeing what might be an actual proper distribution. I would be very cautious with continued longs until that changes. Obviously anything can change in a blink of an eye, but I'm seeing this trend across the board where we've been in a range, maybe some like YM and DAX, they've gone into new all-time highs, but generally it's been this continued behavior where every time we have an up day, the next day is short with more volume. That tends to be a hallmark of a distribution phase. And distribution phase is usually followed by the liquidation phase, so a bear market. So I'm just going to leave it there. I'm not saying it's going to be a bear market, okay? Don't put words in my mouth. I'm just saying what I'm seeing right now, what we have. Shorts, little bit more powerful. So if that happens, we should see price action that sustains below all of this bottom of the range, or this, what is that? 67, 74.50 roughly. Then they kind of pop below it. But right now it's just a range bound market. And you can see that by the daytime show chat complaining how terrible the price action is. So maybe this is a good time to get better at range trading. Intraday, you can also see bar a few sort of pumps here and there. It just gets stuck a lot. Just gets stuck in these intraday ranges as well. So yeah, this is not easy to trade, and this is where something like the initial balance and the concept of either failed auctions and or responsive fades to the opposite side, that's actually pretty useful in these situations. So you effectively use the initial balance like an orb, so the full first hour, you wait, you have to wait. I know, we don't want to. But that's one way that I like to grapple with ranges, and that's what's made me become better at range trading. For a long time I sucked as a range trader, and then I took some time for about a couple of years, ran a lot of journals, and eventually I was like, okay, so I can't do small ranges, that's not for me. However, initial balance, neutral days, failed auctions and responsive fades, that became something that actually resonates with the style that I'm trading. It provides me a slightly bigger target, because if you have a failed auction, that's usually then expected to rotate to the other side. And with a responsive fade, it won't always rotate to the other side yet again, but you can usually skim like 50% of the initial balance to the opposite side. So just some pointers that have worked for me, right? Doesn't mean they're going to work for you. Maybe you can't wait as long as I do. I'm pretty patient, and I tend to hold my trades pretty long. So even now, this has been more shorter time frames for me. My average win duration is still 77 minutes, so that's still much longer than most. So just, brainstorming ideas. But yeah, equities might be in a bit of a trouble. Doesn't mean that they won't kick off into another uptrend at some point, but I do think that we are due for a healthy pullback. So, yeah. Brad, hey Brad, good to see you. He says, snowing today, so indoor run while watching metal markets. Yes. Brad was one of my VIPs in the second season. The second season? Yeah, I think so. Oil taking a long direction. Yeah, the oil, I am bullish on oil. I just have some pain points where crude oil first needs to break them. 67 being one of them. If we tackle 67, then maybe this week I will try to do something with RBOB. I am long biased on RBOB purely because of the seasonality. It's that time of the year. But on RBOB, specifically in the options, we do have 225 as a pain point. So that's a little too close for comfort for me. And again, just being patient and seeing what we're doing. All right, let's just have a little quick gander with copper. Volume's non-existent still, but this anchored LME VWAP, which is the London Metal Exchange, starts. So far, they're unable to hold above the anchored VWAP, but we'll see, because this is all very non-committal. And this also could be a function of the rollover, where they are not really working with the full volume in one contract. Instead, it's like split between two. And you can see that if you type into Google CME-HG, which is copper, and then go into quotes tab and then look at volumes. And you will see that copper is trading, when I looked at it this morning, it was like 10,000 contracts in the current contract, and then 8,000 already in the May contract. So we're going to be rolling into K. I don't know why it's K. Don't ask me. I find the whole alphabet that the CME decided for contracts a little bit random. But I do get a kick out of things like HGH. Like, we're now trading the human growth hormone. And, there are others, like frequently the CQG has an E somewhere there, so HGEH. But like crude oil, for example, the previous contract was CLEN. So it's like, what are we doing? Bodybuilding? Like, well, what is this CME? So yeah, but they have, each month has its own designation that doesn't really make much sense, but I'm sure there is a pattern somewhere. All right, so let's have a look. Also, keep an eye on this gamma flip approach in Natty. And VWAP, always a pain point across the board. Whatever you're trading, VWAP has a volume component, so therefore tends to be pretty reactive in any product. And I do mean any product. With some of the products liking the smash through, then reclaim and others touch and then react immediately. But that's the behavior of the product, so something that you should explore as somebody who's gathering knowledge about whatever it is you're trading. But I've been staring at these markets for, I don't know, 12, 13 years now. And I know them pretty well at this point. Dr. Dax says, thank you for the Equities Insight. I really wish you popped into the VIP Pit channel every once in a while to share some commodities magic. Happy Monday, D. Thank you, Dr. Dax. That is being planned. I had to wait until we first do the change of this show, and we weren't really sure of the exact time. So me providing schedules for any future sort of coaching thing that we're going to be doing and planning in the VIP Pit. So for all the VIP alumni, there will be additional stuff that we're working on. Can't really talk about it too much because it's still sort of up in the air. But there are coaches that are designated to run like daily classes there. I'm not one of them because I do this, right? So with my appearances in there, it's going to be something like the coach's hour, or the round table where a few of us are going to be talking and answering questions. But it is planned. We're just kind of having a little bit of a schedule tumble at the moment. However, now we've got the new time for this show, so I can start to formulate my schedule for the upcoming extra stuff that we're planning for everybody who was a VIP. So stay tuned. Jason, how about Anavar? Yeah, I haven't seen Anavar. Do we have something that starts with Anna and then maybe Ver would be? Yeah. It just makes me laugh. It's just something that I think about whenever we roll into funny sounding contracts. Alright, so we're getting a little bit of a pop to the downside from copper here. So I'm going to wait until they retest this Asia low, maybe even this 580. And see what happens. And if it happens on the stream, it happens on the stream. If it doesn't, it doesn't, okay? It's fine, but I'm not doing the whole thing of shorting towards here because to me this is not worth it. I'm somebody who looks at holding trades with the intention of holding them for 100 minutes, and on copper that would mean the profit target between sort of 80 and 110 ticks. It was more during the time of crazy volatility, but we're coming back into some normal ranges. So I've seen the average session range go down by about 30% from last week, so that's a good thing. But it also means that the adjustment of stop sizes and targets at some point is going to have to happen. Right now I'm only seeing a reduction of 5, so I was using 55 in my little bracket here, but now I will need to change this to be 50 and then to be 2R. However, the change in stops is not enough for me to kick this up as a core position of 5 micros that I then scale up to 9. And at the moment there's still a restriction with copper, so we can't even do that, right? So I'm going to keep it at 55 for now. And then if we do get restrictions lifted, maybe I'll reconsider that. But I'm still getting used to the adding into profitable trades. It's still a little uncomfortable. So until that discomfort minimizes. So here's what's happening. So the first 2 add-ons, for me, they're now okay. It's the third and the fourth one that I'm still a little bit bothered by. So I'm just, trying to get used to the discomfort, effectively. And if you can't do it in a combine, you won't be able to do it on the funded accounts. So it's very, very important to test some of these skills of discomfort in a safe environment before you move to anything that counts. All right, so moving away from the LME anchored VWAP. Like I said, just know that this time of day, Continuations can happen, definitely. But the MFE of the mean reversions tends to be bigger. Probabilities for the mean reversion versus continuation are pretty much 50-50. So any of those will happen. But I choose to look for mean reversions around this summer day purely because of the MFE. So if I get hit on the mean reversion, that's fine, because I know that tomorrow I can grab one that will give me the 2R. Sometimes it gives me even more, but this is intraday, and really anything 1.3, 1.5, 1.7R, it's absolutely perfectly acceptable for me. Alright, so let's go back to a 30-minute time frame, because the VWAP is going to start getting visible here now. But yeah, still nothing too obvious. One thing I'm going to do for these energy markets, I am going to put the visible range volume profile, just to get a feel of how the price action is moving. And what I'm doing here, I'm taking the London Open and then dragging it. So at the moment, the only one that's kind of moving away from a very, very small distribution area, aka the value, is natural gas. But the fact that RBOB is creating value to the upside here, I would say that it's stronger. The only problem here is that we do have a very big call wall comparatively with the open interest in RBOB, which is thin, however you spin it. But 225 is my orientation point, so I want to see what they want to do there. And if this value area on Natty starts moving, perhaps we can then have the developing value high, value low to do something with it. But at the moment, the initial balance is too small on Natty. It's only 25 ticks. Can't do much with it. However, some of the stats, when I see the small initial balance, that can either mean a nothing day, so just like stuck in a range, not really doing much, or it can be a precursor to a good trending move. So if my analysis of moderately bullish, then that would be a very nice thing. But for me, the orientation point on Natty is actually VWAP, because I don't have anything else. This call ball, gamma ball, it's big enough, but the macro side is bullish supportive, so not rushing into anything. If it's a true trending day, it won't matter where I enter, because then the slight problem with the trade location should be accounted for by the increased momentum. However, the same vice versa is true as well. If you don't have momentum, then any problem with the trade location choice, it's going to come up and smack you right across the face. So you need to be working towards being pretty decent in both of those. And we're all good at one thing naturally. So that will either be momentum trades. I'm good at mean reversions because I'm a contrarian by nature. But at the same time, while that's my biggest strength, and that's where my bigger trades come from, that is also something that is my weakness, because sometimes I hold trades for too long. I realize that that's not a problem that most people have, because most have a problem holding trades. I don't. So it's a double-edged sword. However, identifying the weaknesses and then trying to methodically work on them through a structured process, that's where it's at. So don't just try and work on everything at once. If you're moving stops to break even too quickly, that's one problem. So just spend 2, 3, 4, 5 weeks not touching the stop. See what happens, okay? What's the worst that can happen? Especially if you're doing that in a safe environment, like a Combine or practice account. See what happens. What's the worst thing that can happen if you don't move your stops? That you uncover, that you actually get stopped out a lot. But that then exposes another issue, that your trade locations are probably not good enough. Or maybe the trade locations are fine, but your stops are too small and you're not allowing them to do. So either way you get like useful data. But the worst case scenario, yes, you get stopped out a lot. But on the other side, you have data. But if you don't get stopped out, you will find that you're actually pretty competent with your trade locations. And all of the, over management that you tend to do is actually not necessary. And then you relax, then you breathe, and you start to realize where your strengths really lie. But as long as you're like over optimizing, and that means changing stops, changing targets, doing multiple trades around the same level, that your strategy usually doesn't call for. All of that adds so much variability into whatever you're doing that it's very hard to keep track of anything. So you need clean stats. One setup, one level, one trade. No messing with it. After you have that, you can start optimizing based on that data. But I think these days people are so used to moving stops. Like, to me, moving stops to break even, it's really just, especially when done too quickly without data, because I'm not saying, you shouldn't be doing it. You should, but only if the data supports that. So it's like, what MFE is usually safe for the profit to already be there in order for you to move your stop just in case of some weird thing happening, and yet not to get wicked out 70, 80, 90% of the time. Because that's not trading, guys. That's just like avoiding pain. And, if I think that I have a strong level, I will absolutely commit to the trade. I'm not going to be like, ooh, let me exit. Only if like I've been in that trade for like 90 minutes, I'm like, okay, it's probably time to exit because it's not doing it. Anything before then, for me, given that I aim for 70 to 100 minute trade duration, it will be jumping the gun and just being a bit grasshoppery, as I like to call it. What gamma exposure platform do you use? So I use a couple. One of them is probably not a retail solution because it's pretty expensive, and it involves pinging APIs to the platform to get data. But the other one is Mon-Thurs, which does have end-of-day levels on commodities, but it does have intraday levels on all of the highly traded products like NQ, equities in general, apart from YM that doesn't really have a notable options activity. But yeah, Mon-Thurs is a good thing. And again, you can go to my YouTube channel, Market Stalkers, because it is a community. It's not just me. And you can find the links there. Is your Topstep X VWAP a bit wonky? Mine will change based on my visible range. Mine doesn't do that though. So if I do this, I've seen a few people mention that before, and frankly, I mean, VWAP does have a time component as well. So I guess if you are maybe on like a different, because I like to use the open, high, low, close divided by 4, but the default is, I believe, this one. So let's see whether that will change with the visible range. So no, mine still doesn't change, but I know that some people have reported that as a little buggy bug. But yeah, my one seems to be pretty stable. What happens if I'm on a low time frame? Let's see. So maybe it's a time frame thing. Because look, on a 2-minute chart, that's where it is. But on a 30-minute chart, it's actually nowhere near it. And again, VWAP does have a time-based component because it is a moving average with volume added into it. So it does make sense. But I always use my VWAPs on, especially from like the Globex session, on 30 minutes. If I'm seeing a range-bound day, I might be using like a session VWAP. And I will be using that from a 5-minute time frame though. So yeah. And then there's also a question of big contract, so mini versus micro. I find that micros are always a little bit off with the VWAP because it's a derivative of a derivative, right? So you have the mini contract or the full contract, whatever you're looking at, and that tends to be the benchmark. So all of the micros are then derived from whatever the major contract is doing. We actually had a question about like why do micros move pretty much the same way as minis? It's because it's a derivative. It's not a real contract. It's still derived from something bigger. But yeah, I don't have a problem with the VWAP changing unless it's on a low time frame. So maybe it's a low time frame thing. I don't know. Copper is still trying to go back to Asia low, so that's all fine. And then once it's there, we can have a look. Thoughts on gold, bullish flag or just ranging? I don't really look at things like flags and stuff. I know that some people do, but flags are a bit wishy-washy to me because it's like, well, where do you enter, where do you exit? Should you put your stop all the way underneath the entire flag if you're going for a bull flag? To me, that's too much because I would prefer to use a distribution curve of the flag itself and then use a developing value low as my point of interest, which would give you a better entry. But that's just me, so I just look at different things. I think that it came back to these levels pretty quickly. So let's have a look at that GC chart yet again. 30-minute time frame, visible range, volume profile also here. But we're going to zoom out a bit. Why? Because I want to get to this weak structure here. Why is it a weak structure? Well, if you look at the volumes, the drop that created the weak structure was very quick and it didn't have too much volume in it because it happened so quickly, right? It just kind of ran through things. So since we are sitting in almost an area of the weak structure, that could be a point of a reversal. How much downside that has, I cannot tell you, because every time we went into a bit of a higher high, we did see a pretty big drop. Is that going to repeat? I have no idea because I don't have a crystal ball, but I would not be long here. So that's my thing. And if I look at the visible range volume profile, the thicker area is actually sitting at 51.35, but I actually have a level of 51.25, slightly further down, where the gamma wall is sitting from today. So until we get there, or at least make an attempt of getting there, I don't really feel like gold longs are a good choice for me here. It's too high up. We have 5200 as the core wall. Asia was not able to break that. So now an alternative is to put in the Asia high, Asia low and use that as the orientation. So let's do that. Something I do all the time, every day. I'm like a parrot. Asia high, Asia low. Only 1 second. Now, Asia low for me, the way I do things is actually ends at 6 a.m. my time, which is the Tokyo end. Even though Shanghai continues to trade after that, I felt that the Shanghai does most of the moves. So if you're using Shanghai initial balance and Shanghai end, you're probably missing out on the pre and post Tokyo take profit or first line of positioning. So what I do, I use Globex open and Tokyo close as my areas to define the overnight range. Right now, we tested the Asia low, tried to go higher, failed. So for all intents and purposes at the moment, this is looking a little bearish to me. Not terribly bearish because the volume still hasn't come in, so there's nothing to push it. But it's a bit of a precarious situation. Can it go higher? Yes, but usually when you have days of gold going higher, the Tokyo range won't be so small. And I want the Tokyo range to be comprised like 40 or 50% at the very minimum of the overall average daily range that we have at the time. If it's smaller than that, it either means that they're trying to decide what to do, or it means that we're about to reverse. And we've seen how gold reverses, right? It's relentless. So caution with gold today. It's not super clear, but it's sitting underneath the Tokyo range. That's the only thing I can say. VWAP is so flat, flatter than Kate Moss's chest at the moment, so that's not really providing us with any additional situational awareness. And the profile from the London Open, we're in the middle of the middle, and we are hugging the point of control. Point of control, contrary to the name, is not a control of anything. Hogue and Andre call it the point of chill. So it's like the middle of the middle, the widest point of the profile. And technically, yes, that is where most contracts traded, but only because price did not move. So therefore, that's like the worst situation for a range-bound day to be initiating trades exactly there. But if you're suspecting a breakout or something, then yeah, you can absolutely use the POC to see whether we dip below it or we stay above it. So there's always a way. There's no one way of doing things. It's just that, I have my way, and for me, this would be too high up, and me being the mean reversion trader, I always go to the contrarian side. So I'm like, can I short that? Can I short that? Because it looks very juicy as a short, because you have all of this. So my mean reversion eyes are going ding, ding, ding. But we'll see, It's been very bullish, and the fact that it crawled back up here, that's not a good sign either, right? So it's so unclear. I think they're like in a holding pattern. It's like, yeah, we went back to 5,200. Now what? So until that now what is resolved, I personally don't want to touch this thing. All right, Nat Gas is trying to go into this reclaim or view up. What's the time? So 12 p.m. went by. There is a silver fix that happened 18 minutes ago, but because it's in rollover, I would rather not deal with that today. Because again, the split volumes are going to be causing weirdness, and the signals that arise from such events, because the split volumes, they are very dodgy. So we need something else. But natural gas is trying. It is trying. And it is also extending the initial balance here too. So in about 11 minutes when this TPO period ends, we're going to see how that looks. But we are trying to crawl above this gamma flip, which means we're now switching into the positive gamma environment, where we should see some more sort of either smoother movements, so not like bonkers just going one way, but even if it's going upside, it should still come into 3.10 and then have a bit of a reversion, and then we can catch it maybe on a retest of VWAP or IB high or something. But it's doing a nice sort of slow rise in volumes, which usually happens around this time. Just some patience needed here, because I don't do breakouts unless we have a mean reversion to value from the previous day. If we're moving away from value, I will usually do a pullback trade, just because the breakouts against that, so breakouts that are going further away in the same direction from me, are not very successful. But again, keep in mind that I like to hold my trades for 70 to 100 minutes, sometimes even longer than that. So I'm looking at some slightly different references. Angie says, good morning, good morning, good morning. Eloise has joined us as well. Could I please talk about the supply and demand zones today? Sure. Let's see which one of these. I don't think gold is very suitable for it. Maybe copper. I'm just trying to find something that is not so messy, because that's not really. Let's just have a look at silver. Because silver, it's crazy, but it, you know, on larger time frames it tends to be a bit cleaner. This was me, when was this? 19? Yeah, Thursday. More longs after the shakeout into Comex fade. I didn't trade it, but it happened exactly like that, which is funny. Alright, let's just delete all of this. And I know there is a cleanup something somewhere, but remove drawing tools or whatever. Alright, so this is good enough. Let's have a look at the 4-hour time frame. And let's zoom out a bit. Because with supply and demand, you're supposed to be looking at... Actually, there we go. I just hope that didn't remove all of my drawings. It didn't. Okay, good. Because that would have been painful. Alright, so let's have a look at the 4-hour time frame. Supply and demand is all about looking to the left. So not looking at like the market in a vertical manner, like trend lines and stuff, but looking at it from a horizontal, what happened here type of analysis. So the first thing that we can see, if I go left far enough, is that there was a pretty defined high that was not traded through. What does that mean? It means that we didn't trade through this high. So that high remains. If it trades through it, according to the original supply and demand, technical supply and demand rules, that invalidates the supply. You could have a liquidity sweep and then a move through it, but that usually results from a pop into an even larger time frame supply that you may not be aware of on your current time frame. Okay? But for now, just remember that we are looking for untraded highs and lows. So how many do we have? This one was traded through. This low here traded through by this kind of situation. So this one traded through by this. So the only two that I see that qualify in this recent range will be this one and that one. And of course this one up here, quite far away. So untraded low, untraded high, untraded high. Okay, that's step one. The next step is to look for areas where you have a big move. Think single prints, think FVGs, whatever the F people call it these days. It's the same thing. It's a committed, large move away from an area as the main qualifier for how good a supply or demand is. So something like this, where prices are like moving away. So yeah, there's a base, but the move away from it is really quite meh, right? They didn't engage. They went into a crawl away from it, but that's considered a weak move away. So once you identify the ones that had that move away, that becomes your area of interest. The problem with this one is that it's in the middle of nowhere, because you also have to see where the originating swing is coming from. So what's the major swing here? What is it? It's this high and it's this low. At the moment, that's what it looks like. So that's your major swing. And therefore, the safest supply and demand areas would be this one up here, and then this one here, which is actually a low quality zone. Why? Because there's no strong move away. We had another zombie rally here, right? So it's like, oh, I suppose we're going up. Do you want to go up? Yeah, I suppose so, Joe. What about you, Dave? Yeah, I suppose I'll pop a couple. Yeah, put me in. Whereas this one here is a kind of a medium quality supply. Why? Because it moved away, but it took some time, right? It took some push, pull. And that's also something that can happen with good quality demands and supplies. they start slow, but then pick up speed. That's fine. But if there's no speed pickup, like this one is a good momentum eventually, right? If there's no speed pickup and everything is just like, yeah, we're not sure, low quality demand, right? Immediately. Then you're looking at how many times that demand level was retested. Here we can already see one test, but another thing that I see here is that they tried to get out. Let's make this bigger because we're not old. So they tried to get out, but then as soon as they got out, there was a selling wick, and then the next candle dipped right back into this point of where we started stuttering around and changing direction, and then eventually they were like, yes, okay, we're going up. So that means it's there because it's the extreme of the swing at this point, and therefore it was reactive. So they touched the end of the equilibrium, or the nearest edge of the equilibrium, and bounced away from it. So the supply that we have in the middle is a decent quality supply. It's decent. But the problem that this supply here has is a couple of things. It is not really high enough in the overall distribution curve of the swing that we already have to be super safe. But it could be reactive. It could be reactive. However, you have to work on the confirmation, and you have to go down, drill through the time frames and go, okay, so if the profile does this, then I'm going to do that. Where are the ADRs and, all that good stuff. But generally, it's a decent quality supply on the account of having a strong move away and the fact that we didn't spend a lot of time there either. But the location of the bigger swing, it's not an originating swing point. This one is, okay? All of that goes through like different scoring of the supply and demands to come up with a quality of it. And, supply and demand was something that I did for the first 5 years. And in trending markets that have a lot of ebb and flow, like the commodities and Forex do, they are awesome. But I don't think they're particularly useful for intraday because you can't do the same analysis like this on like a 30-minute chart, 5-minute chart. Why? Because highs and lows intraday, they are just liquidity sweeps into these bigger areas. So you might say that, well, we had a developing supply here, right? This little area. What did they do? They did a liquidity sweep above the perceivable high and then reversed it. But if you look at it on a 4-hour chart, you're like, aha, they went into this one, which is a higher quality supply. Okay. So one thing that weakens this is a trade location, chart location, not trade location, within the larger swing, so context. And 2, the fact that we already had a test of it. So this is not a fresh test, it's a second test. Every subsequent test, the quicker it happens upon the move away, that's a bad thing. It means that the supply is probably not that strong. You ideally want to trade in that way, or you want to put it in your plans, fresh first tests of good quality supplies. It takes a while to get it in your head, okay? But it's a very good way of large time frame analysis. Not 2 minutes, not 5 minutes, not 15 minutes, not 30 minutes. 4 hours daily, weekly. It is your directional indicator that can give you a clue of where this particular product might turn around, okay? But supply and demand is only a reversal strategy. It is not very good for continuation moves. It is not very good for breakout trading because a lot of the times you will get a wick above the supply, then a return. So it's a very kind of one-sided analysis, which is a good thing because it provides context. But please don't try and use it on like 15-second chart. It's different things are happening when the large time frame supply and demands are in force, and entirely other things are happening usually because the dealers and market makers intraday who are using the lower time frame highs and lows as points of liquidity. Okay, liquidity sweeps, as people call them these days, as the kids like to refer to them. A trades, hi DSC, you trade a combine, does it mean even you lose your live account sometimes? It depends. One of them I drew down, the other one wasn't going according to plan, so I decided to just close it and start again. Because I realized that the variance that I was working with is too much and I wasn't happy with it. And as soon as you get to a certain drawdown in the live account, especially if it's like a new live account, you're like, this is not right. And I hit the summer. So I got into the live. Let me roll back. So I think I got the live in May, and then I had initial nice kind of movement, and then everything just died. Literally, it was just like watching paint dry, man. And it was just not worth the stress at that point. I just couldn't get it going. So I was like, let's just start over, because this is not what I want, right? And that's okay, as long as you talk to the risk team, okay? If you're somebody who's like intentionally trying to blow up live so that you go back to XFA, that's not what they want to see. My first live account I held for, I think it was like 15, 16 months or something. And then we were like buying the house and stuff, so it's like, what's the point of keeping anything in the live when I needed it for something else? So again, you have to talk to your business partners, which is Topstep when you're live with them. You know, people are so against the live account. Okay, great. So go trade your own then, right? I like having a business partner, right? I like that I can call up someone and, you know, either cry on their shoulder or talk through some of the ideas that I'm having. You know, I'm like, well, what do you think is the right approach here? And they can look at some of the numbers. They can't provide you strategy advice because that's not what they do. But they can say, well, if you can try maybe tightening up this, or maybe trying this, because we see that maybe the problem is that you're maybe too aggressive on your targets. You know, you're holding trades for a long time. Maybe consider that. And it's constructive criticism, but many people are like, no, I don't want to be in live. Okay, so be by yourself then. Go be alone in the corner of your room with your screens. Cool. But I like to have, you know, somebody to talk things through. And I'm a hermit lady. I am. But this job gets very lonely sometimes. And if you're all up in your own head and things are not going to plan for whatever reason, for me it was like hitting the summertime, it's okay to just call up someone and just say, well, this is not working. So I want to try something else. I don't know what to do. And they'll be like, yeah, you're right. Let's try again. So they're not like some ogres that will never let you, do anything. They will work with you to try and solve whatever problems you might be having. And like Hogue correctly puts it, whenever you think you have things figured out, the market changes the equation. Now, I could have just not traded during the summer, but then I was like, well, I do the streams, how can I not trade? So that was on me, obviously. I could have just said, I'll just do like the minimum amount of trade, like one trade every 20 days, and I will wait for better times to come. But no, I didn't do that. So that is on me. That's definitely on me. But yeah, it's, it's not your personal brokerage, right? It's a prop account. And we're all, even me, I trade more aggressively on prop than I do in my live accounts. Because it's prop. I'm not going to be trading 0.3% of the position, which is what I do normally, on a prop account. No, I'm going to trade between 2 and 4% per trade. So that means when things don't go well, yeah, it's going to start going the wrong way. But, you need to recognize that on time and have some coping mechanisms. And I also made the mistake of continuing to trade minis. So live and learn, right? Why? Because it never even occurred to me. I'm like, oh yeah, no, I'm only going to go down to micros if I have like, I don't know, 5K left or something. But no, I should have gone to micros way earlier. I should have gone to micros at like 17,500. not when it got to like 12,000 or whatever. But no, I stuck with minis, and this is why I'm aware of that, and I'm trying to find a way to maximize upside, because I wasn't happy with just like 2-3 micros and they're just leaving that. It was too small. So I kept trying to extend targets. I'm like, I can find the bigger trade. And I'm like, no, Dee, stop it. So those are just some of my problems that I've been having of trying to still trade minis and getting in a drawdown and then continuing to trade minis. So now I'm coming up with a different plan where I'm really utilizing micros and scaling into profitable trades, which I've never done before. The way I scaled in, it was like 3 minis as a core position. You enter one at the trigger point, another one around that zone when it draws down into the zone, and then the third one will be just when I already have some profits, so like 10, 15 ticks away from my original entry. But now you have a slightly better average, and that worked for me. But you have to have more balance for that. Like, that's not something you can do in 4.5K, 15K, even 20K. So you have to start a different way. So that's what I'm trying to do now. And I'm uncomfortable still with the fourth, especially the fourth scale-in. So we'll see how this works. But so far, I did try silver one day just to test how it is. That was the result. So that wasn't a good thing. But all of this is me. This one should have been a losing day. I kept to the 4, 5, 6 add-ons. So 4 as a core position, 5 and 6. And then I lost 1 on a core position. And it still ended up profitable. That should have been a losing day. So that surprised me, frankly. I was like, okay, interesting. Because, when you're wrong on the trade through and through, I don't mind losing at all. But the problem is if you're already in with like 2 minis, that's a lot of cash. However, if I've had a profitable trade prior to that, that tends to be, let's even assume that it didn't go to 2R, but it went to like 1.5, 1.3. That tends to be about $500 thereabouts. Full day of me doing 2Rs is this on the full scale-in, right? So this was the day where I did, I think, 2 trades, and then I scaled both of them, and it came up to 1.5K. But then after that, we got restrictions, so I couldn't do that. And since then, I have been trading 4, 5, and 6 on copper, and that's very, very good for like 4, 5, and 6 micros, right? So when you're losing less because you're not tagged into all 6. You're like still on 4. But when you do tag in, the way I trade, that means that I've caught a runner, and then I'm tagged into all 6 and 7 and 8 once the restrictions lift, causing the upside to be amplified, but the downside to still be contained. Does that make sense? I don't know. But that's what I've been doing. So I've been practicing that. I'm still uncomfortable when the the 3rd and 4th tag in happen, but so far it seems to be working. My average accuracy is higher. So usually I'm floating around 50%. This has been floating between 58 and 62. Obviously the average win and loss have come down because of the slightly reduced time frame. Because I'm scaling in and then still shooting for 2R. So immediately that's going to reduce the target by about 17%. And that does not consider the time-based early exits that I also do, because I'm not going to be keeping something, like let's say I entered it post on my cut, right? What's the time? Okay. Let's say I'm keeping something after 9 a.m. Central. So that's my entry. And we get to 12 p.m. Central, I will be closing that. Why? Because that's the time when COMEX usually starts to turn around. I'm going to have to mute myself because the dogs are being picked up for doggy school and they will be screaming. Let's try this with no noise suppression. Can you hear the dogs? Because if you can, I will just mute myself until they're gone. They get so excited when the van comes. Yeah, doggy school. Yeah, doggy daycare. So we have somebody who takes them. They take half the pack on Monday and then another half a pack on Wednesday. But usually on Mondays they pick them up around this time, whereas on Wednesday they pick them up in the morning. So, you know, it's fine. Okay, so you can't hear them. Good. Awesome. Yeah, less than the music. Good. So the music is... Yeah, they are crazy. They're Pomeranian Cavalier crosses. And obviously they're watchdogs, but they also get super excited. They're like, where are we going? Bernard, I think, is the loudest because he's the biggest. The Darth Buddha says, once I hit my target, a stop loss at your target, I was thinking, why not? Yeah, I mean, that will happen, right? If you have a target somewhere where my invalidation point is, I can see that. Absolutely. Eloisa says, no, don't hear them. Okay, I can hear them. They're screaming in my ear. I do have the noise suppression now on the mic, so hopefully that will work. All right, so we are getting a little bit of a movement here from VWAP on natural gas. So this gamma flip on VWAP is definitely a pain point. I don't think that I'm going to be having a trade here yet. And on copper, we are getting to the Asia high, sorry, no, Asia low, and this 580 level, which is GEX3 on Mentor Q if you're looking at it. And it is an important level here and there, but you do have ADRs lower down. I want 580 and Asia low ultimately to hold if I'm going to do longs on copper. LME VWAP can provide further situational awareness before the Globex VWAP, so that would be another area to look out for. At the moment it's sitting at 582.35. What are the red zones? The red zones are supply and demand that I was just explaining to people on a 4-hour chart. So if you go back in time, you will be able to hear me explaining approach of supply and demand quality and how to determine that. So hopefully that was clear enough. Right, so we've got another sort of 17 minutes or so to hang together. Dee, have you ever shared one trade ever? I'm not talking about the $30 profit trades you take, but I'm talking about the real trades. What does that mean? So, and you think that all of the trades that I do are always going to come in when I'm live for that 1 hour a day on the stream. And yes, I have shared plenty of them. So if you ever watch what I call the post and my cut whenever I'm on fast markets, that typically is in my prime time probability zone. Or if you go on my stream and you go back maybe a week or two, you will see me do the day range fill trades that are also high probability. So I don't know what you're trying to start here, and if you want to wake up, and it's like, what is the $30 profit trades? What does that mean? So where do you see $30 profit trades? I'm asking, for real. The trades I take behind the scenes when no one is watching are the same trades that I talk about. I take most of my trades between post NY cuts and day range fill. Those are my two prime time zones when I take my trades. So we can put executions on, and I don't take nonsense trades most of the time. So do I have one day when sometimes I'm like trying to figure things out? Yeah, sure. But I will tell you that. I'm not going to be hiding it. So, and if you want, once these 3 combines are over, I'm going to keep the balance open just so everybody can see. Like, I don't give a shit. Seriously. Like, if you think that I'm not trading the same way that I'm telling people that I'm trading, you've got another thing coming. Because you will see that the frequency of my trades are actually not that bad. These are scale-ins. Not too many trades. I didn't trade too much here. And we rolled contracts on natural gas. This was the silver where I was trying things out. And this is a 4-hour time frame as well. So it's smushing a lot of stuff in there. So there you go. Again, not too many trades. Are you like, I don't know what you're trying to do here. So you're trying to like say that I trade a different way when people are not watching? Like, what is your point here? And if that's what you think, what are you doing on my stream, frankly? I don't know whether this one counts the previous. No, so it's a new contract, therefore it's not going to have the previous natural gas trades. But yeah. So if you're just here to choose verbal violence and to troll for no reason, do that somewhere else, please. Otherwise, the only thing that's going to happen is that you're going to be blocked. That's the only end result here. Your choice. Joe says, how do you relate LME VWAP to COMEX value? I use post on my cut and then see whether we are reclaiming or we're rejecting LME VWAP. So that is the only thing to do for your time of day, Joe, because I know you follow the same post on my cut. Oh, relax. You want me to relax? I think you're the one who should relax because you're the one who chose to come here and start criticizing. So let's see your trade report because I've shown mine and I've shown my executions. Go on. Bruno can grab it in Discord. We can show everyone where you're at the moment. Random Trader says you describe things the same way when on any of the shows during the day. Correct, because I have a systematic way of doing things. And it doesn't change. Do I have Muppet moments? Yeah, but generally I stop them fairly quickly. And that's the difference. But hey, what do I know, right? I've only been doing this for almost 20 years. Anyways, with that in mind, I'm going to go because I want to go and do other things, and I also have to take my Cavalier for a little checkup. He's fine. We're just doing a new prescription, so they need to see him. And given that we have some trolls, I don't want to be continually engaging with that, nor do I want that negative energy in here. So I'm going to end the stream early because of that. So you will have the main daytime show starting around 1:15 my time. It's 12:50 at the moment. Until then, I will see you tomorrow because I don't think I'm on the daytime show. Yes, my top data, I did go over gold today, so if you go back. Oh, by the way, I'm very sensitive. You know what? Yeah, I am very sensitive because because this is my stream. Very simple. So yeah. Anyways, thank you for joining me. Sorry about that, guys. We always get one. Thank you for joining me today for the metal markets. Let's see what the day brings. I don't really, like I said, have very good setups at these levels, so we need to wait until the price action develops a little bit more and see whether this 3 evens on nat gas is going to hit. That would be one of my areas. And for now, we have a reaction from 580. I don't like the fact that this is like looking like a bit of a buying wick, because those tend to be taken intraday and then a reversal comes. So again, taking it slow on a Monday, not really doing grasshopper trades, despite what Alien, what's his name? Alien is spiritual awakening. That's not even English. Like, what are we talking about here? Alien is spiritual awakening. So I'm going to leave you with that. Let's see what the Monday brings. Enjoy the daytime show. And I will see you again tomorrow for another episode of The Metal Markets. I'm Marcus Stoker D. This is Topstep TV, and I will see you tomorrow. Take care.